Let's stick with EVs here. Tesla falling again today as the company announces price cuts to the Model S and Model X in China. The move comes after the company cut the price of the 3 and the Y. Options traders are betting there could be even more declines for the stock. Kelly Intelligence CEO Kevin Kelly joins us now with the action. Kevin.
Hi, Melissa. Well, today we saw 1.06 times the amount of puts traded versus calls, and that got stronger throughout the day. Now we're heading into an options expiration on Friday, and we actually saw the largest contracts traded today were the at-the-money puts. And so you saw over 118,000 puts traded for the $225 strike that expires this Friday, and they were trading at the end of the day at $3.
Here's a fact. Tesla stock has been dropping, and yes, this could cause any investor to worry. But we'd like to note one thing. Tesla, like every other stock, is not immune to the volatility of the stock market, and therefore it is expected that there are some irregularities in the stock price. Even though Tesla bulls and investors desire for the stock to continue on an upward trend, it may not always be the way it turns out. And while, in your opinion, there are justifications to sell your Tesla shares, we believe that this wouldn't be a very profitable move in the long run. Tesla's future is vibrant, bolstered by its robust manufacturing capabilities, strategic partnerships, and continuous advancements in technology. The pathway may seem challenging, yet the potential rewards are enormous. As long-term investors, we're looking for ways to witness Tesla's growth story unfold.
Let's take a look at shares of Tesla trading lower, down about just over 2.5% after more price cuts in China. The EV maker slashing the prices of its Model S and Model X each around 7% in China. This comes against a tough backdrop economically, Shauna. When you think about what's been playing out in China, we were talking about this yesterday, the latest economic data pointing to continued weakness in the market. Should note these price cuts coming back in the market after Tesla, along with 15 other car makers, essentially signed a letter saying that they won't be competing under abnormal pricing. But this shows you how competitive the market is, and Tesla certainly not alone in pushing for this. Their Chinese rivals have been cutting prices as well. But, I was thinking back to the comments that we got from RBC's Tom Narayan yesterday, who said there's too much concern around the price cuts because at the end of the day, if you've got higher volume, even with the lower margins, that's a positive for the company.
Yeah, and that's at least, it seems to be how Elon Musk is looking at it, because he's remained, at least for now, committed to these price cuts, always leaving the door open for more. We talk about the demand picture, what exactly that looks like. Obviously, over in China, the very, very slow recovery that we're seeing, all the problems, the disappointing econ data that we've gotten out over the last several weeks, certainly painting a tough picture for Tesla and obviously those domestic players.
You may find it interesting that a lot of investors are still buying Tesla shares despite the dip. In fact, many are taking this as a buying opportunity. Now you wonder why Tesla occupies the top positions in ARK Invest's fund and with other investors. It's simple. Tesla is the company of the century. Only a few investors recognize this, and they are the ones who are heavily buying the shares. Hey guys, welcome back to Tesla Tomorrow. Tesla's stock performance has been nothing short of remarkable, attracting a wide range of investors who believe in the company's long-term growth potential. Follow the recent drop in Tesla's stock price, and you'll see that it is obvious to take a lot to stay bullish on Tesla stock at this time. But it's best that you do so, and here's why. The past year brought both challenges and exciting developments for Tesla as a company, and also influenced its stock price and growth. However, there are a lot of details that are unknown, and these details are what we're going to uncover in the course of this video. But before we start, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. A lot of people think that Tesla is succumbing to market challenges, but in reality, Tesla are not seeing as much of these issues as other car companies. For instance, it's no news that inflation is starting to hit hard, and this may not even be the bigger problem, because beyond inflation, deflation could prove to be much bigger as a threat. Tesla's dominance stems from its pioneering efforts in electric vehicles, innovative technology, and brand image centered around sustainability and luxury. The car company has gained significant attention for its innovative electric vehicles, and has also experienced rapid growth and achieved a high market valuation. Cathie Wood has once said that aside from the problems of inflation, companies are also likely to suffer the hit of deflation. Wood claims that 50% of the S&P 500 is at risk of creative destruction, and most companies, especially automakers, are unprepared for the effect of deflation. She also added that automakers could suffer bad deflation as well as commodity deflation if proper steps are not taken. This is how it could happen. Companies that are running their shares on the short term with less investment innovation may find it difficult to keep up with the coming market challenge. Likewise, automakers with products that can become obsolete will also have to sell these commodities at a discounted price or risk incurring a massive loss. For EV makers, in a case of commodity deflation where inventories surpass demand, car companies may have to sell their cars at a lower price to cover the cost of production. Now, this may turn out to be the case for EV makers that are trying so hard to compete with Tesla, except of course, they come up with better innovations for their cars. This is not the first time Cathie Wood is revealing her concerns about deflation. The stock investor has warned that deflation, rather than inflation, will be the largest risk of financial markets and the economic downturn or upturns in the coming years. She added that the only companies with a competitive edge on innovation are the ones that can thrive despite the expected deflation, and the decreased economic growth will prompt a shift back into the type of companies that can grow regardless of the economic backdrop, and this is where Tesla takes the lead. Tesla has a solid competitive advantage in its industry, and it is also huge on innovation, meaning that a company such as this may actually be able to overcome the troubles with deflation. Tesla has always had an upper hand on inflation compared to its competitors, and no other EV company seems to be coming up anywhere close to that. Tesla's EVs already have a high rating in the market. Its Model 3 and Y are making huge sales in Tesla's markets globally, and according to a new study on Auto Loan Date, these Tesla car models top the chart as the most common cars seeking auto loans in the United States. Likewise, Tesla has several interesting investing projects going on, like robotaxi, semi-truck, and the humanoid robot, and full self-driving. This is something that many of Tesla's competitors are far from achieving, at least not in the future. Tesla has also collected a vast amount of real-world data, far more than its competition, which gives them an edge on quality innovations. For Tesla and its investors, the issue of innovation is not a thing to be bothered about. Rather, other pressing challenges like battery supplies, which heavily affect its production capacity. Tesla's battery tech is at least 3 years ahead of other auto manufacturers, and this is owing to the company developing its own AI chip. Tesla's gigafactories are on top gear to ramp up car production and delivery, and the automaker is well on its way to making massive revenue from its expected car models, taxis, and robotics. It's clear that Tesla dominates the EV market, and based on its innovations, it's well poised to continue doing so. Even Cathie Wood agrees that Tesla's innovative approach to all of these things is highly unmatched in the EV industry, constantly reiterating the significance of Tesla's upcoming projects in boosting its market potentials. But what do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.